So what's the expectation for 2030? And if you look at that, then actually what you see is, of course, there is a very big increase here on the basis of High-NA. Again, High-NA being a very significant enabler of our customers' roadmaps in the second half of this decade. And there you see High-NA in the high market scenario at a level of 30 billion. And as you know, for High-NA already today, with the tools that we're selling today, the north of 350 million. So it's obvious that that is a very significant driver of the top line by 2030. You see Low-NA sort of at the same level, both in the high scenario and in the low scenario. And you actually also see that there is still a bit of a dry and immersion, so a bit of a deep UV that gets added to the capacity in the second half of this decade. So those are the main changes from 2025 to 2030. Again, please bear in mind that the tools that we're going to sell in 2030 are different tools from the tools that we're going to sell in 2025. So obviously the productivity and all the specs of the 2030 tools are at a higher level. And of course, that should also translate into a better ASP for those tools in 2030 in comparison to 2025. And if you take the unit increase and the ASP increase into consideration, and of course you take into consideration the fact that the installed base continues to grow both for the service business and for the upgrade business, then you get to what you see here on the right-hand side of the screen. The total sales opportunity that you could model on the back of these scenarios, and that gets you to the 44 to 60 billion euro opportunity that we see for ASML at that time frame. So if you try to analyze it, so where does it all come from? First off, the quick analysis from 2025 last year to 2025 this year. This is another cut at it. You see that the jump at midpoint 27 billion that we had in the scenarios of last year to the midpoint that we have for the scenarios this year. You bridge 27 to 35. You see 4 billion coming out of that from EUV. And that's units in particular. You see non-EUV accounting for 3 billion, and you see the installed base businesses that are referred to jumping from 6.5 to 7.5 billion, and that gives you a 1 billion delta there. So that's the way to come from the midpoint of last year to the midpoint of this year. If you then go to the 2030 projection, so how do you get from the midpoint 35 for 25 to the midpoint 52 in 2030? EUV is a very significant driver of that in 10 billion. Of course, the lion's share of that, that's pretty obvious, is the number of High-NA tools, right? That's the key driver there. But there's also an ASP increase because, as I mentioned to you earlier on, of course, the EUV tools that we're going to sell by 2030 have higher productivity, better overlay, et cetera, as a result of that, more value to our customers, and as a result of that, will command higher ASPs than the tools that we're going to sell by 2025. Non-EUV business is gonna chip in 3 billion. As you saw, there is a unit number increase there as well. But also there, you will see our continued dividends, if you like, of the roadmap, where we do produce tools, that have higher performance as a result of that higher value to the customer and higher ASPs. And the installed base business at the midpoint gaining 4 billion from 25 to 2030. So this is the way it's built up. If you then look at the CAGR that we have there, you actually see that the CAGR for 2020 to 2025 grows from 14% to 20%. And then you see that the CAGR from 25 to 2030, we keep at 8%. But again, we keep it at 8%, but off a significantly higher base by 2025.